Is buying points on your mortgage a smart move? Are you considering buying points in your mortgage? In this video, we'll dive into the pros and cons of buying points, also known as discount points, to help you decide if it's a smart financial move for you. From understanding how mortgage points work to calculating the break-even point, we'll cover everything you need to know to make an informed decision. Whether you're a first-time home buyer or seasoned homeowner, this video will give you a better understanding of the mortgage process and help you make the most of your hard-earned money. So, is buying points on the mortgage a smart move? Watch to find out. Thinking about buying points on a mortgage, you're not alone. But many people get tripped up by the math and end up making costly mistakes. When considering a mortgage, many potential home buyers find themselves weighing the pros and cons to buying points to lower their interest rate. It's a crucial decision that can have a significant impact on your financial future, and it's essential to understand the implications of this choice. One of the most common dilemmas homeowners face is whether the benefits of buying points outweigh the upfront costs. On one hand, paying the points can result in a significant long-term savings on interest payments. On the other hand, it can require a substantial amount of money up front, which can be a significant burden for many buyers. It's a trade-off that requires careful consideration of one's financial situation and goals. So how do you know what makes the most sense? For many, the decision to buy points comes down to the math. Will the monthly savings be enough to offset the initial cost of the points, and how long will it take to break even? These are questions that require careful consideration and an understanding of the numbers. Another factor to consider is the borrower's credit score and the loan term. For those with excellent credit, it may be possible to qualify for a lower interest rate without buying points, making the decision to do so less appealing. How do mortgage points work, and what are the financial implications of buying them? In essence, mortgage points are a form of prepaid interest that borrowers can pay to lower their interest rate. The more points you buy, the lower the interest rate will be, and the more you'll save on interest payments over the life of the loan. Each point costs 1% of the loan. Let's go over an illustration of how this might work. Also, like and subscribe to this video so I can continue making content for you. Here's a cute duck that might help convince you. To illustrate, let's say you're taking out a $300,000 mortgage with a 4% interest rate. Buying 1 point will cost you $3,000, but it would lower your interest rate to a 3.75. Over the life of the loan, you'd save $6,000 in interest payments, but it would take around 5 years to break even on the cost of the point. To better understand the benefits or drawbacks of buying points, let's look at another real-world scenario. Suppose you're buying a $400,000 home with a 20% down payment and a 30-year mortgage. Your interest rate is a 4.25. You're considering buying 2 points to lower your rate to a 3.75. In this scenario, buying points would cost $8,000 up front, but you'd save $14,000 in interest over the life of the loan. However, if you're planning to sell your home within 5 to 7 years, buying points might not be the best decision. It would take around 5 years to break even on the cost of the points, so you wouldn't reap the full benefits of the lower interest rate. In conclusion, deciding if buying points in your mortgage is a smart move depends on your individual circumstances and financial goals. It's essential to weigh the pros and cons carefully, considering the upfront cost, potential long-term savings, and the impact on your monthly mortgage payment, along with your actual goals or intentions with the property. Do you plan to buy and hold or sell soon? And do you need your loan to have a certain payment for it to fit inside of your budget? Points can be a fantastic way of accomplishing this. Talk to your loan officer and figure out what your break-even period will be, then decide the best program for your individual needs. Thanks for watching. We'd love to hear about your experience with mortgage points in the comments below. If you're looking for more mortgage tips and advice, be sure to check out my next video. You can also connect with me at ross@impactloansllc.com if you or someone you know are in the market to buy or refinance a home. Thanks again, and see you next time on the channel.